All right, what's up, Tycoon? Super excited for today's video. We're going to be taking a look at Carnival Cruise Lines, ticker symbol CCL. All right, now we are looking at the 3-year weekly chart, and I want to show you guys a weekly chart pattern that has been setting up for the past 3 years. It is what's known as a symmetrical triangle. All right, now I know this screen can be a little confusing, but I'm going to break it down and make it super easy for you guys, okay? So essentially, we're looking at this strong white trend line right here and then this strong white trend line right here. Okay. If you notice, it is forming a nice symmetrical triangle. Now, this is not a necessarily a bullish pattern. Okay. This pattern can go either way. So what we are looking for is confirmation on the weekly chart of a breakout to the upside or the downside. All right. And to be prepared for that and position yourself. So, you can short it if we do get a break below here. All right, you can short it, and then I would look to take profit in between $13 and $8. Those would be the price targets on shorting it. And then, you can play the breakout, and I would look at taking some profits right around in between $30 and $32. Right. So, that was the weekly chart. We're going to go in and zoom in a little bit more onto the daily chart, just so you guys can get a better sense and look at the direction. Okay, so if you see here, we did come down below it, but this pattern is a weekly chart pattern. So it's very important that you stick to the chart for the pattern, right? You can't let a 1 hour chart breakdown where it comes below on the 1 hour chart or on the daily chart affect how it looks, affect the weekly chart pattern. Okay, so we did have a breakdown below here, but if we look back at the weekly chart, okay, this was just a wick. Now I don't play the wicks on these. I like to go by the bodies. Okay, so we have the body here, we have bodies here, body here. We're testing it with the bodies, and the wicks are just wicking below it, right? And we have a couple times we wicked up and things like that, but yeah. So I just wanted to go into that real quick, what we're looking for. Okay, and some of the reasons that we're into this, and I'm going to show you guys a really really good options play to get into right now. Of course, it's not financial advice, but it is a good play to position yourself with if you are bullish on Carnival Cruise Lines for the summer. Some things that could really drive the price up of the cruise line potentially, okay, is one going to be the price of oil going down, and gas, right? If those go down, because it's so expensive right now, you got to think who's hurting the most from this, who uses the most energy, right? It's these cruise lines, it's these planes. So it's really been hurting them, and causing a lot of pain with them. But if oil comes down this summer, right, and there's no COVID outbreaks, because it's a very risky play. There's always the potential of another COVID virus breakout. Something like that could always happen, and we saw what happened to the cruise lines the first time that happened, when COVID came out, the coronavirus. But initially, what we have here is known as bullish divergence on the daily chart. Okay, so this is where, if you look here, we have a low here and a higher low here. So the RSI is making higher lows, but right here we were making lower lows. We were going down. Here's our low, and we made a lower low. Now, since that point where we made a lower low on the stock chart and a higher low on the RSI, we have gone on a very nice rally. Okay, and we had a 30% rally at its highs, and we're pulling back a little bit. But that's fine. When something runs 30%, you can expect to see it fall back 7%. That's fine. It's still up about 23%, from 21.5% from its initial lows that it just had here recently. All right, so it's been a very nice rally, and I'm looking to see if we're going to get a breakout above here again, like I said, on the weekly chart, not the daily chart, but we can zoom in a little bit more and get a better sense of the price action. Now, the main reason we're looking at the daily chart, okay, is because there's what's known as a daily gap up. All right, we have a huge gap up, not huge, but we have a very decent sized gap up here in this bright blue box from $40 to 41.50. Okay, now daily gaps tend to fill about 90 to 95% of the time historically in the stock market. The question is not so much if the gap is going to fill, the question is if the gap is going to fill, right? I wouldn't expect Carnival Cruise Lines to go up and fill this gap in the next month, right? Or the next week, right? I'm not positioning myself accordingly for that. But what you can do if you are bullish on this gap and you do think that that gap will fill, let's say some of the conditions that I said are met and oil prices drop really hard, the price of energy drops, the whole Russia-Ukraine thing comes to an end, and they're able to make an agreement, and the fighting over there is done. Right, that would be another condition. And then three, the condition that there's no more outbreaks, right? Where there's no more coronavirus outbreaks or different strain outbreaks, and the carnivals are booming this summer, right? Or the cruises are booming this summer, right? If there's a lot of attention on the cruises, and the fourth thing also is inflation. Okay, inflation does not hurt profitable companies. What they're able to do is they're able to rise, increase their prices, and they just make more money. Now, whether or not people are going to have that money to spend is another story, right? If inflation is hitting, people really hard, they might not want to go on cruises, right? You got to think, who's that going to affect? Like, the lower middle class to the lower class of people, right? Now, are those the people that's always going on cruises? I mean, those people might go on a cruise once a year, right? But the main people who are going on cruises have money, and inflation and all this stuff isn't really going to be hurting them that much. A lot of them are going to be getting raises at their jobs. And if they're in the upper middle class to upper class, they're still going to have the money to spend to go on their cruises. And a lot of people are spending more money now because we have opened back up, and instead of going on vacation, when they go on vacation, they're not getting the cheapest cruise, right? They're like, all right, we're gonna freaking go out. We've been stuck in the house for 2 years. We're gonna go and get a bad ass cruise. We're gonna book the nicest one that we can get. So that's kind of my theory on some of the conditions that need to be met. And now for the options play. Okay, so we're going to look at Carnival Cruise Lines, go to CCL, and we are going to look at the September expiration date. All right. Now I told you guys about the gap fill up from 40 to 41. So we're going to play the gap with that. All right. So if we go to the 35 strike, right, and we hit buy vertical, that's going to bring up a vertical debit spread. All right. Now, I'm basically giving you guys a tutorial on how to do a debit spread on Thinkorswim. But if you need a debit spread tutorial on Robinhood, I have one in the top right hand corner of this video. Okay. But we're going to buy the 35 strike, and we're going to sell the 40 strike. All right. And if we look per each contract of these, if you get one, the bid ask is about 7 to 8 cents. Okay. So, it's a pretty tight bid ask. And if you look here, the max profit is going to be $493. Okay. Insane. We're talking about turning less than $10 into $493. So what I want you guys to think about this realistically, okay, is not to go in here and say, I'm going to turn every $8 into 493. But what I want you to realize is 100% happens when you get 16. If you get it to 16, if you get it at $16. So what you can do is you can buy 100 of these contracts, right? 100 of these debit spreads for $800, and have a max profit potential of 4,930. Right. And now that you're comfortable and you have such a high max profit, your risk to reward ratio is insane there. Right. You're only risking $8.30 to earn $493. Right. So very, very good risk to reward ratio. And what you can do is, like I said, you can come in here, you can buy 10 contracts, buy 50 contracts, buy 100 contracts, and start to trim your profits as you go, right? As Carnival Cruise Lines gets higher, we're not looking to hold this through expiration date until it closes, right? There's 175 days until this contract expires, which is, a little bit over 5 months. So, there's definitely some time on the play, right? This is not a, this is not a play that's meant to develop in the next week or two. We have seen profits on this already. I think my CCL spreads are about up 20% today. Just because I got into these on the dip, right? There was a dip today, and then the market recovered a little bit. So I was able to get into these for a decent price. But that's just what I want to show you guys is, if you come in here, it should be very easy for you to get 100% profits on your play. Now, let me know in the comment section below if you guys make 100% frequently, if you've ever even gotten 100% in the stock market before, right? This play is, almost a 10,000% play. It's, definitely not that high, but when you look at it here, I mean, turn $8 into $80, that's 1,000% right there, just for some perspective, you know what I mean? So if you can, get 10 of these for $80, you have the potential to turn it into $800, and that's not even your max profit, right? That's, not even, that's like a quarter of the max profit on this play. Now, if Carnival Cruise Lines and you hold through expiration, you hold up until September 16th, 2022, and CCL is trading above this gap, right? And we're above 41.39. Actually, we're as long as we're above 40, because the spread is only to 40. So as long as the spread is above, the price is above 40 by September, then you will actually get the max profit of $493 per contract. So imagine you bought 100 of these, right? And then the max profit is $493. Well, now you have $4,900 and it only cost you $800. Does that make sense? So hopefully you guys like this video. Leave a comment down below. Actually, I think there'll be like 40 grand. I'm doing a little bit of the math wrong, but anyways, you get what I mean. Crazy dumb risk to reward ratio here. And if you want to get access to plays like these before they're posted on YouTube, you guys want to be able to chat with me daily, hit me in the DMs and talk to me, let me know, try to figure out what I'm looking at, what things I like, etc., then go ahead and join the Options Trading Tycoons Discord. The link to join will be in the description below. If you use code Zachary, you'll get a discount on your membership.